Directline Assurance Company has told Treasury CS John Mbadi that Royal Credit did not and has never transferred its shareholding to anybody, including all those persons and companies shown in the current CR12. According to the company, several investigations have been conducted by various agencies, and they've all come to the conclusion that the purported changes in shareholding and directorships were null and void ab initio. Stephen Latour reports.
After Treasury Cabinet Secretary John Mbadi appeared in Parliament for the hearing of the Directline Assurance proceedings, the company has now come out to set the record straight while disputing what has been put unanswered. According to Directline, Royal Credit Limited paid in cash a share capital of 100 million shillings of 5 million shares of 20 shillings per value in the year 2000 and year 2005 capitalized shareholder loans of 148 million shillings or 7,250,000 shares. Directline has further clarified to the Cabinet Secretary National Treasury that several investigations have been conducted and have all come to the conclusion that the purported changes in shareholding and directorships were null and void and in violation of Section 166 1A of the Insurance Act. In the statement, Directline says the CS is well advised to acquaint himself with a multi-agency investigation report that brought together DCI, Auditor General, IRA, ODPP and OP that reviewed the investigations that had been done by DCI as it lays bare the fraud surrounding Directline's shareholding. On breach of the Insurance Act Cap 487, Directline says since the year 2005 and changes made in January 2012 when capping was introduced for ownership of insurance companies, former directors breached Section 166 1A and Section 23 by transferring AAA capital first to Directline, then to themselves, and creating trusts to companies owned by themselves. They further allotted 100 million shillings or 5 million shares that was originally put by Royal Credit to AKM, Janus and Royal Media Services without written authority from Insurance Regulatory Authority. IRA has declared the said transfers null and void ab initio. It is noteworthy that no money was paid for these shares by the purported allottees. On litigation, Cabinet Secretary John Mbadi referred to various cases on ownership. Directline now says the CS is the enforcer of the Insurance Act, which is very clear on violations and their consequences. He holds records that show who become a shareholder, when and how. If in doubt, he can as well invite each party to prove how and when they pay their shareholding. Directline Assurance adds that the shareholder disputes litigated over the past 6 years and the open bias displayed by the regulator have made it very difficult for Directline to operate. Directline now wants Cabinet Secretary John Mbadi, who is responsible for implementing the Insurance Act, to decide how to deal with those who have ignored and continue to violate the Act. Directline should not be issued any policy without first and foremost correcting the current fraudulent CR12. Directline also wishes to clarify on the 400 million shillings which the Cabinet Secretary said had been removed from Directline by Dr. S.K. Macharia. 2 years before John Macharia died, Directline had participated in an international tender to undertake the development of market stalls and low-cost housing at Toy Market. Agreements had been entered with the county government of Nairobi, power of attorney vested in the late John Macharia, and a full project team constituted. After John died, Dr. S.K. Macharia came in to complete the project and entered into a joint venture agreement with the county government of Nairobi. The 400 million shillings was transferred to offset initial project costs and secure funding from a local bank. Failure to perform the project will incur heavy penalties. Instead of the CS Treasury concentrating on legitimate business transactions, he is advised to assist Directline recover billions of shillings taken by former directors. End quote. It is noteworthy that insurance companies, just like banks, are regulated entities. In case Directline continues issuing policies and collecting money from the public while continuing to violate Section 166 1A, Section 71 and Section 23, it is effectively cheating the public. public, and the CS Treasury carries ultimate responsibility for not taking corrective action. That's what Directline is doing. It is not for the courts to resolve matters that squarely belong to the Cabinet Secretary, National Treasury. Stephen Leto, Citizen TV.